Well, many people wonder why more economists and analysts were not able to predict the mortgage meltdown, the financial crisis, and the global recession that followed. Well, it could be that current economic theory is seriously flawed. Well, our next guest is Robert Johnson. He's the executive director of the Institute for New Economic Thinking. And you say economists, we spoke about this yesterday, need to go back to the drawing board. Robert, you've served both as a practitioner working as a trader for George Soros, and you've also served as sort of an academic, an economist. You worked with Joseph Stiglitz, a well-known economist. Tell us a little bit about the Institute for New Economic Thinking. It is a Soros-funded organization, and what you're trying to accomplish there.
Sure. First of all, George has had a very different view of how financial markets operate. Boom-bust cycles, instability, and as this crisis came to fruition in 2008, he thought it was time to essentially give the theoreticians a nudge. That what's wrong with theory? They have in their mathematical models what you might call the illusion of stability. And he doesn't believe that markets are stable or the market process or market expectations are stable. He thinks that they're quite unruly and turbulent. Well,
clearly we've seen that, right? The last 3 years bear out that thesis. But what is frightening for someone like myself is that clearly much of our fiscal monetary policy, whether it's here in the U.S. or around the world, is being built on sort of what we call modern economic theory. So yes. What's missing, and what are the implications for that going forward?
Well, the notion, the illusion of stability is complemented by the illusion of control, that government's in charge, that the government can control each and everything that happens and determine outcomes. What we're seeing in this globalized world with enormous capital flows is that many things are not in control. Many of the large banks are so-called too big to fail, maybe even too big to save in the case of Switzerland or the UK, where they're so large in relation to the economy. But in this global world, what does a state do? What can the government do?
And these are the questions that you ask at the Institute. Right. And had we not, I mean, trying to look on the bright side of things, the global recession, what happened with the mortgage meltdown, was sort of a catalyst that allowed for this type of thinking to be shared amongst academics. What are you finding out of some of the conferences that you hold and some of the questions you put out there to academics?
Well, the first is what they talk about, the difference between risk and uncertainty. Risk is like you have a deck of cards, you know there are 52 cards, you say, you know, there are 4 aces, there's 4 tens. Uncertainty means you don't know what the structure of the world looks like. Things are in flux, things are changing. People behave differently in the face of uncertainty, and we think, in many respects, since the Lehman collapse, we've been in a period of increasing uncertainty. A lot of the best thinking on that was done in the 20s and 30s, the last time we went through a very, very turbulent period in the economy. So many people are looking back to what thinkers thought at, how we say, expressed at that time.
What do current policymakers say about what's coming out of your institute?
Current policymakers are asking us to ask questions. We talk with many of the leading central bankers, finance ministers, ex-government officials like Paul Volcker, and they say markets are a human organism. They're not like the physical sciences. There's a subjective psychology. They're much more unstable. But they ask us to look at the questions that they have responsibility for, particularly in the realms of financial regulation.
How do you ever capture that human element, though? I mean, when economics struggles to create formulas that describe sort of human behavior on some level.
Well, at some level, the pretense that you have structural systems like a physics-type mathematics has to be challenged. Bringing psychologists to the table, bringing anthropologists to the table who study the tribe of economists and what kind of
These are not the typical scientists. Rob, hold on 1 second there. We got to go to break, but we're going to have more after the break with Robert Johnson. We're back now with Robert Johnson, the executive director of the Institute for New Economic Thinking. And Robert, we left off with this question: who around the world, in terms of policymakers, heads of governments, who really kind of gets it and is, you said some actually refer to you and want you to ask the questions?
Yeah, I'd say there are a number of people involved in financial regulation. Philip Hildebrand from the Swiss National Bank, he's the governor, is an extraordinary mind. Adair Turner, who runs the Financial Services Authority in the UK. Mervyn King and Andy Haldane and Paul Tucker, all at the Bank of England. Mervyn King is the governor. Outstanding. Mark Carney at the Bank of Canada. They're asking real questions. Dominique Strauss-Kahn at the IMF is extraordinary.
So when you hear about issues with Ireland, we've been talking about Ireland, Spain, yes, Portugal, Greece, Italy. Are the people running those organizations, the ECB, the IMF, are they in a position to be able to handle that crisis there? Or do you expect in a year things will be worse?
I think that they're having a very hard time deciding to restructure debt because it would wipe out the capital of many of the banks that hold the debt and send us into a crisis which was akin to our bailout crisis around the time of the TARP legislation. People are trying to avoid that at all costs, and I think as a response they're making bigger problems.
Now, we talked about the U.S. I want to bring it back here to home. We talked yesterday about Bernanke. We talked about Geithner. And one of the things you said to me, which really I want to put this in contrast to what's happening overseas, is that our Federal Reserve, our central bank, is sort of governed by politics and money right now. Whether or not that's true specifically for Ben Bernanke, it is sort of true functionally in practical terms.
Well, it's true of the Congress and it's true of the administration, which is going up for re-election in 2 years. The amount of money that you need to raise to get re-elected to a Senate position or to the President of the United States is enormous. So the entire American system is embedded in this money politics incentive. Someone like Ben Bernanke, who's being, oversight is done by Congress, he's appointed by the President, has to be mindful of this environment. Timothy Geithner is appointed by the administration. He has to be as well.
Do you talk about the Federal Reserve and the notion that it could be abolished? I mean, we were talking earlier today, I was on Tom Keene's show talking about Ron Paul at one point calling for the abolishment of the Federal Reserve.
I think we do need a central bank, but I think in the aftermath of the bailouts and the aftermath of the attempts to cover up all the lending that had been done through the discount window, I know Bloomberg filed a lawsuit, and I know the Dodd-Frank bill created some recent revelations. We have to have a very thorough examination of the legitimate role of a central bank in a democratic nation.
Where do you see us a year from now and in 5 years from now?
A year from now, I think we will still be largely deadlocked over fiscal policy. The American people do not trust government spending at this point. Ronald Reagan once said, the problem is government, the solution is not government. People saw the bailouts and the bankers' bonuses and the hostility that's arisen, and the growth of the Tea Party is a symptom of that, is that people don't want their money.
Do you see the Tea Party as a rising power in the country in the next 5 years?
I think it will continue. I think the economy will have to recover very strongly before that kind of energy will dissipate.
All right, Robert, thanks you so much. We have to leave it there, unfortunately. Lots of things we could talk about. That was Robert Johnson, the Executive Director of the Institute for New Economic Thinking.